Islamic finance is growing faster than regular equivalents in certain markets and is even being adopted by many non-Muslim clients. Islamic finance assets are currently worth $2.2 trillion worldwide and are set to hit nearly $4 trillion by 2022. Well, to hear more, let's meet Hussein Hassan, Global Managing Director of Islamic Banking at JP Morgan, the financial services company. I'm Sarah Lockett. Welcome to the Business Debate. Hussein, welcome to the London Stock Exchange studios.
Thank you very much. I'm very pleased to be here.
So just for people who aren't familiar with Islamic finance, what's the main difference between conventional finance?
The main difference in Islamic finance, or between Islamic finance and conventional finance, is the prohibition on charging or receiving interest. And the second prohibition against excessive speculation. Now, the way that these two prohibitions play out is mostly in the documentation. And what these prohibitions are based on, why they're these prohibitions to start with, I think the concern against having excessive leverage in the system, and that's what the prohibition on interest is based on, and the potential to create financial crisis by overly speculative behavior is what the second prohibition is based on.
Would you say the products end up being the same economically, but just the documentation is different?
Yeah, I think the financial outcome is the same, but the form is different, right? So, for example, if a client wanted to have a home financing, wanted to buy a house, the end result that they own the home through a financing of some kind will be the same whether you're talking about a conventional or Islamic activity. But the process of getting there, in a conventional mortgage, you would lend the money and get a mortgage over the property. In an Islamic financing, you would have to buy the house and then probably lease it to them over a period, and then they own it at the end.
And there's a lot of interest in non-Muslim countries in Islamic finance. Why is this?
I think the convergence in the values that Islamic finance espouses and the values that people increasingly are looking for in their financial dealings are very similar. So social responsible investments, green principles, etc. The concern against investing in sin stocks, these are common values that people espouse and share.
And those sin stocks are things like what?
Tobacco, gambling, arms manufacturing, yes.
And pornography and things like that. So it's sort of ethical investing, which a lot of people want to get into.
Absolutely, yes.
And are there any products where you can't create an Islamic version?
So the direct investment into any of these industries that I've mentioned, or a direct exposure into an interest-bearing activity, is prohibited. And probably an indirect investment as well is frowned upon, but may not necessarily be prohibited yet.
And how difficult is the process of getting your investment products approved by the Sharia scholars?
Firstly, I think you need to keep in mind that of all the people involved in Islamic finance, whether it's bankers, lawyers, and everybody else, the scholars see themselves as the ultimate gatekeepers. They're the ones who are responsible for ensuring that the values in the system are retained. So it's not meant to be easy to get the stamp of approval, but it really helps to engage them early on in the process and to be very transparent with them. And I think to educate them as well, because they are scholars in their field, but they're not experts in finance. So the value of working with them, I think, cannot be underestimated.
And JP Morgan is basically an American bank, so why not leave the Islamic finance to Middle Eastern banks, for example?
Firstly, Islamic finance is now a global phenomenon, right? It is prevalent in most parts of the world, in Southeast Asia, in the Middle East, in Africa, in Europe. Where we're sitting today, there are 3 million Muslims, and those people have financial needs. So as a bank, we obviously are in the business of satisfying the demands of our customers and being relevant to them. We're constantly investing as a bank in increasing our product range and being better able to serve our customers. So it's natural for us to be offering this product.
And how much is the Islamic finance bit worth to you? I mean, is it a large proportion of the business that you do?
If you look at the growth of Islamic finance assets are today at about 2.2 trillion. They're expected to grow to about 4 trillion in 2021. So it's not a field, it's not an area that you can ignore. In certain segments of that market, completely Islamic. So it's an important part of international business for sure.
And what is the most difficult part, do you think, of Islamic finance to get right?
Because it's really based on ethical and religious values, then ensuring that the products that are economically equivalent to the conventional products still retain their ethical and religious foundation, I think is sometimes a fine balance.
So you're always making these value judgments on the businesses that you're investing in. I mean, is it sometimes, I guess it is clear cut if it's a defense company, and sometimes it's not?
Well, we are not making those judgments, and that's why we have scholars who are there as the experts to do that. But clearly, when we are structuring these products and when we're putting these products together and offering them, these are always at the top of our mind, yes.
Very interesting. Well, Hussein, thank you very much.
It's a pleasure, thank you.
And join us next time when we're going to be discussing the latest innovations in the blockchain revolution and artificial intelligence. Bye-bye for now.